what I'd rather be doing. All right, we about to get on here and stream on YouTube. I'm going to have to give the YouTube people the same spiel. Like, I know you guys were expecting that usual energy. Matter of fact, let me go get some caffeine, people. I'll be right back. Give me one quick second. What I'd rather be doing. All right, yo. What's up? What's up? What's up? What's up? What's up? I know some people on the YouTube are like, is the stream muted? Is there no sound today? There's definitely sound. I was grabbing some caffeine. Actually got my favorite caffeine of choice. This, ladies and gentlemen, is not a paid promotion, but big fan of Bang Energy. If you guys end up seeing this, go ahead and sponsor your boy and let's make some money together. If you guys are watching this on YouTube, welcome, welcome, welcome. If this is your first time on a YouTube stream, welcome. If it's not your first time, welcome back. My name is Roy Dunya, co-founder, CEO of ChartAddicts, the #1 coaching service for traders worldwide. We're going to be looking at the markets. That's what we do on these streams. I mostly trade Nasdaq 100. That is the top 100 tech stocks in the United States economy, including some of the biggest names like Netflix, Microsoft, Amazon, and Google. Yesterday was one of the biggest economic days of the year. So if I can just start off this call by giving you guys a rundown on what happened yesterday. So Jerome Powell, who's the head of the Federal Reserve, ended up raising the interest rate, which is the cost of borrowing, by 25 basis points. So they went from 0.25% to 0.5%. The market is supposed to be bearish off of that news, but there seems to be a bit of a lag effect. And so what I've been saying all week is that short sellers are going to get smashed in the market while this thing pumps up. And so folks, and myself included, had short positions down here. We had short positions up here. We had short positions at a few different key levels. And as soon as I started to see the bullish momentum come up, that's when I gave up on shorting the market at the lows and wanted to wait for a retracement. Now the level I'm watching is for Nasdaq. Let's see if I'm doing this right. Yeah, it's 14,300. So I had to explain to the folks on the call, I'm extremely tired today. Bear with me. Today's not going to be the same energy that you guys are used to. But trading is all the same. There's still a direction, right? So you guys know what we're doing every single time we get on the charts. That's the beauty about knowing how to actually trade, is that even if I'm tired, there's nothing, I don't really have to use too much brain power to figure out what's happening. The only time that I really use my brain power to make decisions on the charts is when I have to be flexible, when I have to switch my bias from shorts to longs, when I have to get out of a position right away and maybe enter the opposite side, when the market's retracing against me and I have to double down and enter more positions. So those are the few areas where you're actually going to have to use some thinking. But aside from that, it's really just all the same every time. So the direction of the market is bearish on the 4-hour, it's bearish on the daily. Why is it bearish? We're still creating lower highs and lower lows. So for some of you new folks, there's a high, there's a low, there's a lower high, there's a lower low, lower high, lower low, and lower high. So we're still on a downtrend. And so what I'm looking for now is a reversal pattern here or a reversal pattern here to continue this downtrend. If we break above a previous high, that is when we no longer respect the downtrend and the market has the potential to continue. So what's really happening because of the interest rate news is I believe the market is spiking out a lot of the short sellers. But eventually, guys, today marks the beginning of a recession. Or actually, yesterday technically marked the beginning of the recession. So the Federal Reserve, by making the decision they did yesterday, just fully sealed our fate as a country in the United States. And when the US goes into a recession, everyone else follows after. So the Fed basically just forced a recession onto the global economy. And Jerome Powell was doing a great job of keeping everything very stable. He wasn't trying to say anything to panic the markets, but I always read in between the lines, and he did let a few things slip that I wrote down in my notes that were extremely important. Basically, what I'm understanding from the Fed is that they're going to interest rates until something in the system breaks, and nothing in the system is going to break unless there's a big event like another Ukraine situation, a recoming of COVID, freaking China invading Taiwan, and one of these any of these externalities could throw a wrench in the entire system and collapse the stability of the system. So the Fed is going to keep raising rates, which is bearish for markets, bearish for stock markets, until something breaks. And when something breaks, they're going to start printing again, and that's when we can go bullish. So if I can sum that up in English, right? I'm going to say this slowly for everybody. We are going to short stocks until something breaks. And then once something breaks, we're going to trade the V-shaped recovery back to the previous highs. So let me know in the comments if that makes sense. If that concept doesn't make sense, I don't know. I'm just going to stop talking about fundamentals at this point. Said coach is always leading by example. Appreciate you. That's what I'm here for, y'all. I can't be self-righteous. I can't be out here telling y'all to do all this stuff and not do it. We don't always feel good. Not every day is a great day. Not every day is a home run, but you still have to get to the drawing board. If you realize that it's going to hurt your trading, you got to walk away. But moving in the right direction and doing the things that you need to for your success, even when you don't feel like it, is crucial. It's probably, especially when you don't feel like it, that's when it matters the most. It's night here in Asia, but good morning. Well, good night to everybody who's listening in from around the world. If you guys are just tuning in, welcome, welcome, welcome. If it's your first time on a YouTube stream, welcome. My name is Roy Dunya, co-founder, CEO of ChartAddicts, the #1 coaching service for traders worldwide. These YouTube streams we do every single Thursday. We've been running them for about 26, probably more than 26 weeks. I think I'm going to have to go back and check, but we've been running these live streams for over half a year. So every single Thursday we get on here, catch 600 to 800 pips on Nasdaq, or an hour after the market open, and I go through fundamentals, technicals, and some crypto insights. So if you guys find any value at any point during this stream, make sure to hit like and subscribe on the YouTube so you guys can stay in touch and get more unique content. Now, all that being said, I'm going to go through gold, U30, and Nasdaq. If you guys have any questions, let me know, or forever hold your peace. What I have to do is actually post this on IG real quick, let folks know that we're streaming live. But let me know in the chats, y'all. Let's make this a little bit more collaborative today. Let me know what you guys are seeing. Let me know what trades that you guys are seeing. And let's see if we can make this a two-way street of value. Let's see if I can pick up on something that you guys are looking at, make sense of it, and see if we can take advantage of that. To go ahead and share this. Here, copy. Boom. So for right now, price is still respecting the trend line on Nasdaq. I'm gonna get. Let me get into this in a second. I'm not here trying to do everything at once. Let me post this on IG. Beautiful. One sec. Okay. Now the fun part. Let's get right into the markets. So nasty Nas, let's go up. I heard there's like a motion to rename this pair after me. I don't know. I don't make the rules, but they might call this the Roy 100. All right, that's the new name for this index. Just letting you guys know. I don't make the rules. I'm just the messenger. We've been on a consistent downtrend on the higher time frame since the beginning of the year, January 1st, up until now. We've been bearish in anticipation of the interest rate news and because we've had a real slowdown in the economy. So just to kind of explain the landscape for Nasdaq, we have a labor shortage, okay, 12 million open jobs in America, an unemployment crisis. So now we have a rising number of people who are unemployed every single month. We have an inflation crisis where we're printing the highest inflation numbers since 1980. We have an interest rate debacle where the Federal Reserve has to raise rates to crash the markets. And so all of this is bearish for the equity markets. As I've said before, the market makers. So this is the part that's going to get me in trouble. This was going to get us kicked off YouTube. But I'm going to give you guys the sauce. Here's how markets really work. There are market making institutions that literally provide enough cash in the system to let us all trade on their platform. The only way that they can run the game is if they have somebody to trade against them. Is if they have someone to trade against them. So that they can take that money. So this is like, long story short, the psychology. If there's a bunch of retail orders short in the market like this, at each of these black lines, this is called open interest, all right, or short interest. It's the amount of people or the amount of volume on the sell side of the trade. So if the market makers get word that that there's a lot of short interest on the side of the trade, what they'll actually do is they'll spike the markets up and grab all of that liquidity. And they'll continue to do this until there's no more short sellers in the market. Once all of us have gotten crushed in the market trying to short enough times, that's when we step out eventually. We eventually step out of trying to short. And then the market makers will essentially wait until all the short interest becomes long interest, when folks start to buy breakouts and things like that. So when folks become net buyers of the market, that's when I believe personally that they're going to spike the market back down. So this is a pretty interesting game of, obviously, where we are in the middle of a recession. They just started to take all the money out of the economy. They're literally telling us we're crashing the economy right now. But for some reason, Nasdaq is spiking up. So I know that in the long term, the reality of the world is going to catch up with the price of the market, and we're going to end up continuing bearish. The question is when. So in the short to medium term, continue to trade the momentum. Here's the biggest lesson. Continue to trade the momentum in the short to medium term. So if the market spikes down and closes above right here, then we can catch a retest and trade the bullish momentum up to the next zone. So just because the longer term picture is bearish doesn't mean we can ignore what's happening right in front of us and not to take advantage of what's happening in front of us. We have to do both. And so there's one way to take advantage of the shorter time frame move, which is on the short or on the long side. And then eventually, either tomorrow or the next week, we're going to end up coming back and shorting this market. Make sense? Now, I know this is not what you guys are going to learn on Baby Pips, and I know that this is not this is not what you guys are looking for in terms of like a lot of people this is stuff that's just not taught, right? Even in the courses that we have, we don't focus too much on the actual mechanical side of the markets, on how market makers move markets, because we're very focused on price action ourselves. But this is sort of like the psychology of the players against us, is we see them spiking sellers out of the market. So let's continue to go long in the short term, and then we can go short next week or the week after. Someone's asking if it's GJ shorts. Whoa. Yes. I took some long positions yesterday. They played out. So we're at the 78% from the highs. So the short would be at a retest of the 71. Boom, put that baby back up there. Probably a double top here. Around 156.5. So you guys know the drill. And this is something that everyone needs to learn, whether you're scalping or whether you're swing trading. It's the same principle of entering off of an impulse or entering off of a retracement. So if you guys don't learn anything from this call, at least learn that when the market pushes off of a zone and it's already made an impulsive push in the direction you're looking for, don't ever enter the bottom of the market. Always wait for a retracement. Now you're like, well, Roy, sometimes the market doesn't retrace and it keeps going. That's fine, right? Your job is not to catch every trade. Your job is to only take quality positions. And so if you're entering at impulses, chances are most of your life is spent in drawdown these days. I'm just going to take a giant guess. You guys tell me in the chat if I'm wrong. But if you're constantly entering and chasing impulses, I'm willing to bet that 70 or 80% of your life is spent in drawdown. However, if you're entering off of retracements, then you really don't need to eat that much drawdown before you realize the trade's not going your way. It's either going to make a double top or it's not. When it starts to violate the double top and it starts to close above and create a new floor, that's when you can start to look at yourself and be like, you know what? I didn't see the double top rejection. Let me jump out. So you're not really holding that much drawdown if you're finding these low risk entries.
Look at Nas.
What's up, brother?
Nas. You want to look at Nas right now?
Oh, for the longs.
Is that a retracement right there?
For shorts?
Yeah. Take a look.
No, it doesn't look like it, brother. I really feel like buyers are going to continue to spike sellers out of the market until the sellers have no more self-confidence. That's what I feel like is the strategy.
Okay. Gotcha.
It's literally just keep spiking, and everyone's going to keep trying to force the short. Eventually, people are like, fuck this. I'm going to start buying. That's when the markets are going to spike. It's still a bit too early. The Fibonacci short is a scalp, though, because you see this inverted head and shoulders. So it's going to come up to the 78 or the 88.6, sell back down. And if it forms support here, that's the inverted head and shoulders.
That could be a good scalp.
For sure. I mean, scalping the short right here would also be valid at the 88 or at the 78.6. Hey, yo. Sheesh.
I kind of like it.
1,500. Yeah, I'm gonna scalp this short here. Just from the 78 down to the 61, or from the 78 down to the 50. Let's see if we at least get some kind of rejection here. In the bigger picture, this 14,300, I feel like, is where we're going to get huge sells next week. And so for now, I just think that we're going to play in this range. And then next week, once we get back to these highs, that's when we can really start shorting. Great entry, Stefano. Just got to see if we're at least going to get that push down.
I'm just booking 150-minute candle. That's how many points is that to the 61?
I want to say 30.
50.
Yeah, 30 points.
Yeah, so I'll book partial right there.
A cool 300 pips. Yeah, for sure. I'm really not looking to hold this thing. This is not a swing trade at all. This is just like a wick that comes down. And guys, be careful. Sometimes the price will just like wick down and wick right back up in a second. So you might not even have a chance to close those partials. So what I would do is I would actually set the TP.
The TP, yeah.
Yeah, because that's happened to me before. It's like, but I mean, at least we in blues. Blues is blues.
That's right.
$30 points, all I need. Mario says buys on Nas. Brother, I don't know if you're listening to what I'm saying. It's definitely long-term buys. Or not long-term, but like medium-term buys. But, we just scalp in the short. Roy, if any, what's the correlation between Dxy and indices? US 30 and Nas 100 about to drop. Look at this is why I love YouTube comments. It's 50% of the people are going to say short, 50% of the people are going to say long. Yeah, I'll be honest, I'm not liking this. The support that's formed at the 71. I'm going to at least give it a second.
Yeah, I'll give it a try. Just wait for I'm waiting for a 50-minute closure. I'm in blue still. I shorted gold at 1945 also.
Oh, this actually looks really fucking good. Huge area of interest right here.
Yeah, I like that. Little double tap on the 15 minutes. Divergence, if you want to call it.
You got divergence?
Yeah, look up the. I don't usually use the RSI, but do the RSI. Watch, you'll see that.
Why did I click volume?
Do you see any sort of divergences? Then just going down a little bit. Yeah.
We got bearish divergence here and bullish price action. Yeah, down to like 32 would be awesome. Good stuff. Is Nas going to give us at least one candle?
It's playing around the same area.
Yep. Now, I'll be honest. I'm going to jump out of the short. I don't like the way it's looking.
Yeah. I'm going to wait until the 15-minute closure. Let's see. That's what I'm going to wait. If not, I'll jump out.
Sure. Yo. Yeah, bro, I'm out.
Moving aggressive.
Yeah, I mean, it could still come down and wick. At the end of the day, though, it's like, is it really worth it? The risk and reward. This looks like a better move. We could push down, continuation. So we have break of the trend line, push, retest 61. That would be ideal. Yeah, for now, I think buyers are going to keep spiking the market.
Yeah, I'm out of there.
I was thinking to myself, like, who in their right mind is buying stocks in an environment where the Federal Reserve just raised interest rates, and then I got reminded. I'm like, it's the Fed. The Fed is the only one with enough money to push the markets like this and to kind of make their decision look like a good idea.
It's crazy. And that is also considered market manipulation.
Probably big market manipulation. Because I'll be honest, if you read the Bank of America reports now, their research team, and if you read the JP Morgan research team and the Bloomberg consensus, they were all expecting shorts on the stocks. They're all positioning themselves and telling their clients and everything else that there's going to be some downside to expect. And so the investment funds aren't the ones bidding the price up. It's got to be somebody else. And now who has enough liquidity and enough interest to bid the price higher? It's the Federal Reserve.
The Feds, yeah.
So, but at some point they can't keep buying stocks because they promise to reduce the amount of stocks they're buying. And so as the reality starts to set in, like you go to the Federal Reserve website and you check like the balance sheet and you see the number get smaller and smaller and smaller, that's when the market's like, oh shit, there's really no more money in the system. And I think that big wake up moment is going to happen in the next week or so. And we're going to start shorting again. But for now, price is obviously just bidding higher. Bulls are in control.
Could be a fake out. I don't know. There's a good area though.
I know, bro. Trust me, I know, but it's don't trade against the momentum. That's what I know.
This gold shorts though. I'm about to book my profits on gold because I don't even know about this. These markets are so shaky lately.
Yeah, bro. I'm just gonna be honest. Like, I don't like to make excuses, honestly, but I promise you, there's something unnatural happening in the markets, and it's expected though. I'm telling you, this interest rate news is not it's not like some CPI print that comes out every Thursday. It's like we've been running this show for 12 years since the great financial crisis. And we're about to just turn off the faucet. So people are gonna, the market's gonna get thirsty.
True.
I love this area, Stefano. I really, really like this area for gold. I just think that there's a liquidity zone here at 49. So stop losses would have to be above there. But I do see some downside to this.
It's a nice area. I had it marked up too. Yeah, it's a nice area. I like it. I like how price action is playing out as well. So
for sure. So I mean, this could be a wick. This could be a wick. And so the real test is to see how it reacts around these candles, these previous candlesticks. So I always look at the body of the candlestick and I say if the candlestick closes below, it starts to close below the body of the previous candles, that indicates bearish. If it closes below this body, it's 100% bearish. And so that's like the bear side scenario, is it actually has to start closing below these candlestick body closures. For now, I think as long as it stays above this zone, and if it breaks above the 14,000 level, it's just going to continue to the upside. I really just noticed this, that we're sitting at the 14,000 key level, the key psych zone. So it would make sense to kind of get a reversal back down, but I'm telling you, I don't trade against the momentum anymore. I've learned my lesson. I'm a different man now. Adrian says I'm long at NAS at 13,961. That support right here, that previous area of support. I mean, help yourself. I personally don't like to go long at resistance. Like, the way I trade is I buy low and I sell high. Buying high and buying tops, not really my strategy. So if you want to trade the momentum, go for it. Personally, if I'm going to trade with momentum, I like to wait for a pullback so that I can get a good price down here. But if you guys want to enter this, I mean, just accept the risk and understand that you're buying the high of the market. I'm not saying it's not going to push up. I'm just saying that that's the reality. It's like if you're going to trade against the market. So the DXY has been letting off some steam, but I honestly feel like it's going to start to push bullish, because when you take dollars out of the system, which is what they did with the interest rate decision, it makes dollars very scarce. When it makes dollars scarce, the value actually tends to go up. So I think by next week, price is going to have hit a key level, and we're going to start to turn back the other way. US 30 formed support at the 88.6 fib, probably going to be pushing up as well. I'm not too big of a trader on US 30, so I'm just going to look at it slightly. Bitcoin's starting to inch higher, but I still see more downside on Bitcoin over the next 3 to 6 months. Yeah, as far as I can see, there's no real entries. Everything's been moving since before market open. Just trying to find something. Come on. Pre-session consolidation. London session lows. London session highs. Okay. I think I can get behind this. SPX shorts back to this support level. That's something I can get behind. That looks the most clear. So just to kind of explain to some of the folks that are more new, just in case you guys don't understand my strategy, my market open strategy, here's the pre-session highs from London session. That's a pretty good area to go short. Here's the pre-session lows. That's the pretty good area to go long. So if we short down here, we could also go long at 41 or 43.30. My longer term target on SPX, if you guys want to at least take something away from this call, you guys want to take away a certain price that you can take home with you, 36.30 or 36.50. Let me give myself some breathing room. 36.50 overall target for SPX to the downside. Yeah, we got some room to go, people. We got some room to go. We're in a retracement right now, but once we're done with this retracement, it is big, big, big shorts. Just keep that in mind. Bigger picture, 36.50 target on SPX. Now, the only reason I haven't shorted yet is because the momentum is aggressive. So I'm kind of looking for some sort of smaller time frame confirmation first to start shorting at this high, and we can just scalp this thing down to the downside.
Check out the 15-minute on NAS 100.
Huge wick, bro. Come on, stop playing, bro. I got on the wick.
Yep.
Yeah, you know that's how we do it.
13,914. That's going to be that target.
It hit my limit at 14 even.
There you go. Oh, 14 flat?
14 flat, that's it.
Yes,
That was it.
There you go. So if you guys want to scalp shorts on SPX, this is basically the pattern I'm watching.
My TP is going to be 13,930. Then I'm out of there.
So I'm actually going to enter now, just off of this retest. Yeah, 13,930, just this next fib level. That would make sense. Okay, there we go. Got a nice follow through. Okay, that's 40 points, 60 points, 80 points, 90 points, and that's 100 pips. Good stuff. I had a 0.1 running, 0.1. That was 780 bucks. So I'm pulling that. And then I'm going to leave two positions open. They're 0.05, 0.05. And those are both running at about those are both running at 400 bucks a pop. Oh, 450. 420, 410.
Damn, it's moving.
Hey,
Wow.
great call on that re-entry. This is why teamwork makes the dream work, people. Teamwork makes the dream work. All right, now officially
sir.
priced at the 61.8. So if you guys are going to pull partial profits, this would be the price from the 78.6 to the 61. That's the guaranteed trade. Not guaranteed, but that's the highest probability. Everything after that is a gamble. It could come down to the 50, but it could kind of dip halfway and then reverse back up. So if you see profits on your screen, this is the point where you have the choice to take it or be okay with it being gone. It's kind of the choices we're dealing with.
Quick $500 for me. I'm okay with that.
Yeah, but I'm definitely not complaining.
Yeah, I put a 5 lot on the on my entry. I'm out of there now with 2,600.
There we go. You said 5 lots on what, FTMO?
No, on FTMO, right? But I entered at that 14 even.
Okay, there we go. No, you got a really good entry.
Right, it was hard not to take it though. Like that's resistance right there. You feel me? Like
Yeah, I mean, you look left, you see that those wicks coming down. I mean, that was the indication right there.
I see that for sure, but you guys got to keep in mind the momentum. Like, you guys see this giant bullish candle? You guys see this bull flag right here? You guys know what happens after a bull flag when price breaks resistance and forms support? It usually continues, right? So that's kind of the rationale there. Is like, I understand the trend is bearish, but I don't like to trade against momentum. Momentum in the markets is one of those. It's like the train is moving. Don't step in its way. Do not step in its way. But if you're going to be scalping, just be mindful of the fact that you're either scalping or you're swing trading. If you're scalping, understand what you're doing. So for here, I secured my profits. I literally just closed the second trade. And so I only have one position running with a 0.05. And that joint is running at 500 bucks with a 0.05. Okay, now it's running at 560, 580, 550. Okay. So that's in break even now. My last position is now in break even. I understand there's a risk it can get hit if it does want to continue, but that's the risk I'm willing to take. I don't want to give back any of the profits I've already pulled. And that's why I've decided to protect my trade and put it into break even.
Also, trail that stop loss too if you want to do that.
For NAS, the only time I trail stops is if I'm trading intraday, because realistically, like, if you want to put your stops anywhere except for that top entry, it's going to get hit if it wants to continue. Like, there's 1,000% chance you're basically asking your stop loss to get hit before it moves. So the only time I actually trail stops, so I put it at entry, but if I'm going to trail it, I have to wait for it to break structure.
Right.
That once it breaks structure, then I start to move it to these fib levels. Because even when the market breaks this structure, it's going to come back and test the 61 before it drops. So if you're trailing your stops, I'm telling you, like, managing risk is crucial, but you want to give your trades a chance to play out. And if the more tight and the more conservative you get with your stop losses, especially on Nasdaq, you're going to find that it's just going to hit you and go your way every time. And so I try to give the market room to breathe because I understand the game now. I understand that they don't really want retail traders all sitting on the, in the trade, in the short interest of the trade.
So wait for a couple candle closures to the downside before you.
Exactly. Well, wait for it to break structure. It's not just about candles. It's about, this is the low, this is the high. So this is the new floor. That's why it's forming support here. If it violates this floor, wait for it to come up and retest and then push off one time. The second it pushes off, you can move your stops right above it. Make sense?
Gotcha.
Yeah, trading Nasdaq really requires risk management and requires you to let the trade play out. The perfect example is how I closed early on the first time because it started to spike and then got back in. Letting the market just really play out and being patient with it, honest to God, is like what's required of Nasdaq because of how volatile it is. But why is the dollar dropping? Guys, I'm very confused, right? I know a lot about how markets work mechanically. When you pull dollars out of the system, it makes them very scarce, right? I'm from Lebanon originally. In Lebanon, they need dollars as a reserve currency just for the economy to run. And so the demand is there. I don't know how taking dollars out of the system is leading to a bearish dollar. I'm honest to God, very confused as to what's happening, but I think we're going to get an answer in the next few days. I'm going to keep looking through the Federal Reserve numbers and just figuring out, are they printing while they're trying to raise rates? Like, how are they playing this thing?
They're not trying to let the market crash. So they tank the dollar so the market could go up.
That's exactly what I'm thinking. But the thing is, they can't keep that game going forever. Like, they have to stop printing.
Yeah, but you have a lot of shareholders in these companies that's in NAS 100, and they're not going to be thinking about losing any money on. They want to make money. They don't want to lose. So if the market goes down, they lose.
I mean, that's for sure. But they also can't just keep bidding the price high, If the interest rate, like the only reason stocks were going up so much is because corporations were getting hundreds and millions of dollars in handouts from the government in loans that were interest free, PPE, and all these other subsidized handouts from the money printing. And instead of going out there and hiring people in research and development, they just bought back stock. This is what they do. When you buy back your own stock, the stock price is going to go up. This is the way it goes. So they've just been buying and buying and buying for so long. And now that game is done, I just don't see how they're going to have enough money to keep bidding their own stocks up. And so eventually, it has to come back down. All right, let's get a quick reality check and remind ourselves where we are on the higher time frames. This is pretty straightforward. We have a higher time frame support and a higher time frame resistance. The higher time frame support is down here, right where price is forming support. We also have a massive selling zone right here. So long story short, we're in consolidation between those two zones. And that's really how we should look to play it. Instead of guessing a direction for the breakout, it's to buy low and sell high. So we did the first part. We sold at the high of the range. Buying at the low would be ideal. Is anyone still in the Nasdaq trade?
No, I manually closed.
You closed it, right?
Same, I booked.
There we go. Now we walk away in blues. Folks got real quiet after that one. They said, maybe one more trade won't hurt.
Looks like it's in the consolidation area and it's going to go sideways.
Yeah, I could see that for sure. I'm like waiting for volume to kick in on either side, buyers or sellers. So far it's pretty slow. So like, as soon as it gets back down to this floor or this low, I really feel like we're just going to consolidate here. You're right. So you guys let me know in the chat or in the YouTube comments one takeaway that you guys had from this call. If you guys want me to look at any specific pairs, we can go and look at those pairs. I'm going to see GBP USD, and that's about it. So they can't stop printing when they have a printing machine. Yes, they can, because they printed so much that prices are going up too fast. And so now they have to stop printing or else they're going to fuck the economy up. So now I can subscribe because we think alike. All right, I'll take it. If you guys are watching this and you at least found something valuable, anything at all that you guys are looking at and say, you know what, the perspective that they have on this thing is actually pretty cool. Make sure that you guys hit the subscribe button and then hit the like button just so the algorithm can show us some love on YouTube. He said they're grabbing the buy side and sell side liquidity. This is very true. If you guys want to understand the business model of the market, here's the pre-session consolidation. This is what happens before the New York session opens. Fake to the upside, fake to the downside, double bottom, and trend. Now, the only thing is if we can't break above this sell level, so the pattern basically goes like this. There's 3 variations. So fake up, fake down, double bottom, and trend up. Consolidation, fake up, fake down, consolidation, gets caught at resistance and shorts. Or pattern 3, consolidation, fake up, fake down, double bottom, break, retest, and pop off. We can enter the right shoulder. That's what I think is happening here. We have the consolidation. We have the fake up, fake down, double bottom. And I think the trend is going to continue bullish. However, if price gets caught at the inverted head and shoulders, this is going to be the entry. Hope that makes sense. A quick overview. If you're a ChartAddicts member, this is in my course, my the personal one that I have. All right, but real quick, I'm going to run to the restroom. I'll be right back. If you guys have any questions, comments, concerns, put them in the chat. I'll answer them as soon as I get back. Whoa. What just happened? How long will this recession be? I'm expecting 3 to 6 months. So basically, we're going to go into a recession until something breaks. Then the Fed's going to step in and save the day. So 3 to 6 months. Yo, this thing is crashing.
Roy, you got to get some sound effects on here for every time Nas hits TP.
Burr, 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 burr.
You feel me?
Bro, I definitely feel you. I'm also half asleep. If you guys are watching this, if you're first time on the stream, welcome back, or welcome. If it's, if you're returning, welcome back. I gave a quick heads up at the beginning of the stream that I'm on 3 hours of sleep. So I am hella tired. Just letting you guys know. We did take this entry. I took profits already. Did not get a re-entry. I know some folks stayed in or some folks got back in. So now I have a pretty clear idea. Sometimes it takes a while, people. Sometimes it takes a while. It's the same idea as I said earlier. If the body of this candlestick closes below these ones, below these candlestick highs, then we're likely going to keep pushing to the downside. So right now we're sitting at this support level. If the body closes below the support level, then it's just more downside. It's going to retest back up one more time and then drop. If the body, however, closes above this support, then this candlestick will likely get filled and we will continue to the upside. So all we have to do is watch the body of this candle to see how it reacts around this support level. Make sense? I'm still seeing that inverted head and shoulders right here.
I'm still in.
For the shorts?
Hell yeah.
I'd be in break even, my boy. Like the real question that we're asking here, if you're on the short side, is how much of this previous green candle can get filled or can get retested? For me, usually I look at previous areas of structure for that answer. I say previous area of structure just got retested. That's step one. We look left, we say, did this previous daily buy zone get retested for structure? It did. So we've already kind of retested the major structure. We could come down and test 50%, but there's nothing really there to prove that just yet. So for now, I'm just looking at the highs and lows and saying, as long as we close above these highs, we're still going to continue bullish. Now, if the market closes below these highs, it's really simple. Put a sell limit at 13,800 and just short this thing down to 13,500. Right? That's a 300-point move, 3,000 pips. So either way, if this is the trade or it's not the trade, it doesn't really matter. You guys can always remind yourself that there's another trade that's better than the one we're looking at. So instead of rushing into shorts, so for example, right now, if the market starts to break below the support, never ever chase the market. Don't chase it short. There's so many opportunities that will come your way. All you have to do is be a little bit patient, wait for the market to reset. Once it resets, you can get back in and take advantage. Yeah, if I had held that trade originally, I probably would have made 5 or 6 grand off that trade instead of 1,200. So I can't do math. 1537. That's how much? If you add up all the orders, 1537. However, if I had held it, but probably would have been 4, 5, 6 times as much. Now, what's the psychology here? Psychology here is, am I going to be grateful for the fact that I pulled out $1,200 in a day? Or Am I going to want to just jump back into the next trade that I see because I'm not satisfied with the profits and I'm thinking about the fact that I could have made more? Which one do you guys think is a more responsible thing to do? You said what?
Be satisfied.
Be satisfied. For sure. A lot of folks are like, Roy, $1,200 is cool, but like, you should be making 10,000. You should be making this. You should be making that. The truth is most traders are negative at the end of every week. So even if 1,200 is not life-changing for you, it's better than losing 500. It's better than losing 1,000, right? Some of you guys want to go from losing 300 every week to making 10 grand. And you're like, well, I only made 2. 10, 2 is not enough. Be grateful that you didn't lose 300 again, like you've been doing. The gratitude is the most important thing in trading. And that's what stops a lot of folks from succeeding is as soon as you start to get success, you fuck it up because you're just not happy with the profits you're making. You have to think about this as like the probability of getting this short was pretty low. I'm happy that we even got, the profits that we did. You see what I'm saying? If the market continues to drop, that's the skill set that you have to have is getting back into the market. So the reason I don't really trip over losing trades or not losing trades, but missing a trade, honest to God, is because I'm confident in my ability to find the next entry. A lot of folks just aren't confident in their ability to find the next entry. And so they're like, oh, if I miss this trade right now, it's gone forever and I just won't be able to make money. And I think that feeling is really, really destructive for traders. Have you guys ever been there? Who's been there before? If this 15-minute candle closes on US 30, we're going to sell high, gang, and ride the short wave. The great full growth mindset. Take the bread for the day. 1,200 in minutes. Let's think about it. Bro, yes. All right, I used to work at a bank. I used to work at an investment bank. This is more than I would make at the investment bank on any given day. I'm not making $1,200 in a day at the investment bank. Right? So like perspective is fucking crucial. Now, what's the biggest day I've had? It's pretty close to 20K. And so if I try to compare every single day to the home runs that I've had, I'll never be satisfied ever because you're always chasing this one home run. What you're really doing is you're becoming a crack addict. You're a crackhead, right? You're like a fiend because you have this high that you got one time, this home run trade, and you're always burning your account trying to chase that home run trade. Yo, what's popping?
Hey, Roy, just want to talk about something real quick. And I see where the market makers kind of manipulated the market on that Nasdaq 100. You see how it pushed up?
Yep.
And everybody thought it was going to sell right there. If you look left there, yeah, right there. No, go back to the right there. See where yeah, right there. To the left a little bit more to that wick.
Talking about these boys right here?
No, go to the right. Go back to where. Okay, you're right there. You see how they manipulated it and they consolidated it? Because a lot of people thought it was going to sell right there, but it didn't. But they came back up and then it went down.
In my course, when I talk about primary resistance and secondary resistance, so here's the primary resistance. That's where most of the touches are. That's where you're going to get all the retests, right? You see all those retests? If I go on to the 5-minute, you'll see the retest right there. Then there's the absolute high. There's your premium price, and that's up here. So when we say, do you want to take an aggressive entry or do you want to take a more passive entry, a wick entry? The wick entries are always going to be at the discount, at the premium. But the most likely entry, if you actually want to get entered in this trade, like let's say that you wanted to re-enter this trade, the re-entry would be at the second resistance. Does that make sense? So you have the initial drop, then it'll retest the zone before it drops. You have the initial drop, then you'll have a retest of that zone before it drops. You have the initial drop, you'll have a retest of that zone before it drops. The concept of primary versus secondary resistance. And so the manipulation is most folks will enter at the primary resistance with stops just above, and it'll actually go up and spike the secondary resistance before it moves. Make sense? Same concept with the lows. Primary support, secondary support. Now, the thing is, when the market breaks and retests your support, and it holds, that's your opportunity to kind of look at which direction the market's going to go. But if the market breaks this low, you're either going to go long down here, or you're going to wait for a break below and short it. So the only two options that I see here are boom, 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 or the market just breaks through. We wait for a retest and we short. What time is it? 10:42. All right, I might have to get up and get to work here in a sec. Let me see if I can find another opportunity here. The US 30 is at a major sell level. US 30 is at a major sell level.
Big drop on last, bro. Big drop.
There we go. Yeah, we're closing below that support. My whole thing is as long as it holds support at this entry, at this place right here, then it's not going to break through. It's like, I know that sounds kind of obvious, but like higher time frame, you see the bullish, do you see this bull flag or not? So in a bull flag, it's going to retrace down, then it's going to have a wick up. And as long as it holds support, this is how double bottoms are formed. You need this middle spike in order for the double bottom to be valid, right? So that's what I'm mindful of right here. We had a bullish flag. We already had a massive spike. And so as long as we hold support here, the spike can get filled and continue to the upside. If I'm going to take a short position, I think the next short position, either a retest up here, or honestly, preferably is when we break below the support. And we could just put a sell limit at 800 and short it down. Oh, I guess SPX did reject. You got to pick one though. I used to trade all the indices, so I would see a trade on SPX, US 30, and Nasdaq, and I would just trade all of them. I really just stick to my pair. So although I do see this structure, and the structure is still the same, I got to pick a pair. And by picking a pair, I was able to at least make money on Nasdaq. And honestly, I'm really happy with how this turned out. Because when I first got on the stream, people, I'm going to be honest, I was half asleep. I really did not expect to make any money today. Shout out to Stefano. Shout out to you, D Money. You know, we really outside, like, teamwork does make the dream work. Having worked with you guys having traded with you guys for so long, I now trust your opinion. I now trust your judgment. I trust your perspective. Obviously, Stefano is a GOAT, so I'm going to trust his perspective as well. So that's the whole thing about trading is when you know what you're looking at, you have to take advantage of those times in the market where you have the clarity, you have the confidence, you know exactly what you're looking at. In times where you don't really know what you're looking at, most of the time, you should just stay away. Now, we're blessed enough here at ChartAddicts to at least have a community of people that are all like very skilled at trading. And so there's a trust factor there that I can be like, okay, well, maybe I'm not 100% sure about this trade, but as long as somebody has the same perspective and it's somebody I trust, I'll take the chance. That doesn't mean I expect them to win or lose. I'm taking the chance. It's a risk. But if I trust someone's judgment, I accept that risk and I'm willing to also, take advantage. So that's just a slight example of days where I'm just not really there, all there mentally. How you can still pull money out of the markets by being surrounded by a community of people that you trust. And Yeah, I just think that's huge because that's something I didn't have when I was growing into the space. Inverted head and shoulders on GU. Oh yeah, somebody asked me to look at GU. I completely faked. I'm sorry about that, man. Hey, yo. All right, I want to see a pull back and drop. GU is doing the opposite of the dollar. GU is doing the opposite of the dollar. Structure is still the same on all pairs, though. My strategy is still the same. So this concept of primary resistance, secondary resistance. So here's our secondary resistance. Here's our primary resistance. So right now, we've already had a massive bearish push. So we can see as a retracement back up to 1314 or 1315, and then a short back down to 1308. That's the immediate trade that I see.
Wow, I'm still in that thing.
For what, GU or NAS?
GU at 31.
For
Even.
shorts?
No, long. I went long this morning. 31 even.
31 even. I mean, it's very possible. Like we're so low in the market.
And then I got in on a buy at 31.
So here's the one thing that would support the buy is you see how the real resistance is all the way up here. But then there's like a secondary, like minor resistance right here. So it's either going to continue to reject this minor resistance and push off, or it's going to pull back to this higher area before it drops. But for now, I would just honestly look at this structure and just ask myself, regardless of which direction you're in, if you're bearish, you want to wait for a pullback and short. If you're bullish, you want to enter as low as possible. It's hard for me to guess this direction, but because of this bearish engulfing candle that engulfed all these previous bullish moves, I'm starting to think that we're just going to retrace and continue to the downside.
Would that also be an inverted head and shoulders right there?
It not really, only because here. Wow, Nasdaq is at 870. Jeez, now that's a drop. The only reason it's not an inverted head and shoulders is because normally the inverted head and shoulders doesn't have a bearish engulfing here. What you're supposed to see with an inverted head and shoulders is
That's
so let me phrase it and say that it's not a valid inverted head and shoulders yet. If we get one more touch here, I think I'll be convinced. But for me, this kind of looks like a double top continuation. So the market is dropping bearish, comes up to make a double top before we continue to the downside.
Okay, cool. Thank you.
Now, I'm not ruling out the inverted head and shoulders, because if this thing holds support here, then, you know, I could see that. I could definitely see that. I'm just looking at this bearish engulfing candle right here.
That was a news event.
Yeah, we would need 2 or 3 candlestick confirmations to sort of go against this bearish momentum. To tell me that buyers are holding this price and that no matter how hard sellers are trying, buyers control that area. If the market shows us that, then we're going to continue to the downside. But if we like start to break below this even a little bit, I think we're going to continue bearish.
Hey, Roy, I don't know if this is important, but we have GBP news like 3 hours ago.
Yeah, that's what I'm talking. That's what I'm saying. There was a GBP folder at 8 o'clock in the morning. You see that 8 a.m. and that's what drove that down. So that's
monetary policy, official bank rate votes. Oh shit. So usually they're all in consensus over what to do with the monetary policy. One of the officials actually voted against changing the monetary policy, changing the rate. I can see here that oh shit. Okay. All right. Let me explain something. If the US government or the Federal Reserve of America does something, the rest of the world either has to do the same or else their currency is going to feel the shock. So you guys can see the previous rate was 0.5. That's the lending rate for the Bank of England, the BOE. They raised it by 25 basis points, which is 0.25%. That's the same thing that the Federal Reserve just did with our interest rate. So you guys can see it was actually almost at zero in all of 2021. We raised the interest rates, or they raised interest rates for the first time in December. So they went from 0.10 to 0.25. And then they just recently, today, went from 0.25 to 0.5. That's in February. Sorry, that's February. And then now they just went from 0.5 to 0.75. So the Great British, the pound is actually raising their interest rate, which just in English is bullish for the currency. Bullish for the currency. Bullish for the currency. Okay? When you make something harder to get and it's more scarce, the value is going to go up. If you can find Great British pounds everywhere, by the way, Marco, I appreciate the heads up on this. I actually completely missed this, so thank you. But in all honesty, like when you raise the interest rate, it's only ever going to be bullish in the long term for the currency. So just from a fundamentals perspective, I want to go long on GBPs. From a technicals perspective, I need to see a little bit more. All right. Geez, Louise. Nasdaq bled. So overall, great entry. Did we get out a little bit too soon? Yes, but that's why we hold a runner. Holding a runner is how you ensure that if the market does keep dropping, that runner, whether it's a micro or something small, will continue to feed you. Now, I saw the blues. I walked away in blues, and I have no regrets about that. So that's the other side of the equation, is keeping something in the market and catching the entire move. As fun as that is, nothing will ever beat walking away in profits. Nothing. You're like, oh, but Roy, you missed out on thousands and thousands. This could have been 10,000. This could have been 20,000. It could have been. The one thing that I know for certain is that I walked away with money, and I walked away with 4 figures, which most people just don't do in a day. And so I'm very satisfied with the way that this trading session turned out. Now that the market is confirming the direction, that's when we can start to take advantage. So if the market's showing us, hey, I'm bearish, it's going to start to break down, then we could just catch retests at key areas of interest and continue to trade the market to the downside. All right, y'all, I'm going to have to hop off. I have so much work to do. So much work. Before we get off, let me know one thing that you guys took away from the stream. I know that there's a lot of folks that really, you guys are used to a different trading style. Maybe you guys are used to like a scalping trading style. Maybe you're used to like, I don't know. But let me know if there's anything that you guys took away from this call that you may or may not have known. Let me know if you guys took away something from the stream that you may or may not have known. And if you actually learned something on this stream, please put it in the chat. If you guys are watching this on YouTube, hit like and subscribe. It takes 2 seconds, right? It literally takes 2 seconds. Head over, hit like, hit subscribe. All right, let's do some housekeeping real quick. First things first, if you're looking for personal coaching, ChartAddicts is the place for you. We do education for all beginners, intermediate, and advanced. If you want to work with a personal coach, this is myself or Stefano, the individual who was calling out these bangers today. You guys can just join ChartAddictsFX.com, become a VIP member for only $99 a month to get unlimited personal coaching and to take your performance to the next level in trading. Second housekeeping thing, if you haven't already grabbed your tickets to the FX Summit 2022 conference in Miami, this is going to be the largest conference ever put on for traders, for entrepreneurs, investors, crypto lovers, and everything in between. We have the Office of the Mayor of Miami representing. We have companies such as TradingView coming to speak. We have the founder of Oanda speaking on stage. We have your favorite traders like Lambo Raul, Mamba FX, Q Banks, Anthony's World, James Storms coming on stage to speak. So if you guys haven't already grabbed your tickets to the FX Summit 2022 conference, make sure you guys do so before tickets sell out. There's about 38 VIP tickets left, just to give you a heads up. So if you guys are interested in showing up to the VIP private dinner with the special guests at Fogo de Chao or the rooftop supercar show, I'd make sure to grab your tickets before they sell out. There's about 38 VIP tickets left. There's about 110 elite tickets left. And we have plenty of general admission for you guys to come and enjoy that 3-day conference. All right. That's my shameless plug. Let me know what you guys learned on this stream before we hop off.
Hey, I didn't hear that. How many VIP tickets again?
38 VIP tickets left.
Okay, cool. Thank you.
No doubt, no doubt, no doubt. If you guys are a ChartAddicts member, of course, you guys know you get 50% off general admission tickets and 20% off VIP and elite tickets. So take advantage of that opportunity if you're a ChartAddicts member. And if you're low on funds, then pay attention to these calls and figure out how you can make money out of the markets and walk away in blue. So if you guys were using micro lot sizes today, maybe you only made $50. Now, does that $50 3 times a week add up? Yes. Is that $600 in a month if you continue to use like a smaller time frame kind of scalping strategy, or you just book your wins whenever you're in profits? The answer is yes. So is it possible for you guys to pick up the slack and make some funds and really come out and see this experience? The answer is yes. Just don't get greedy. When you walk away in blues, they start to add up. All right.
Or are you making $50 an hour? You can look at it that way too.
Look, I made $1,200 in 15 minutes. All right. So something is possible.
No job is giving you that, bro. You know what I mean?
Like, yeah, for sure. I mean, it's definitely possible, but I'm just speaking to folks who, like, maybe you're just starting out and maybe you really haven't seen that much success in your trading. Don't try to go for the $1,200 in 15 minutes. That's not your goal. Your number one goal is to walk away in profits. And when you do that consistently, they add up. A lot of folks just can't accept making $100 in a week profits, so they'll lose 1,000 instead. Nothing? Nobody? Let me repeat that one more time. Some folks are not satisfied making 100 a week, so they'll end up losing 1,000 instead. Because you keep trying to go for home runs. You're like 100 in a week. I need 5,000. So now you're risking to make the 100, but you don't have a clear plan. You don't have a risk management strategy. And so you're actually hurting yourself. So now you look at the end of the week, it says negative 2,200. Now, okay, I understand $100 is not the goal, but like 100 positive is better than 2,200 negative. He said, oh, but Roy, when you go, you got to risk it. You got to risk it for the biscuit. Your job is to make money, not lose it. So if you're out here losing money trying to make it, you got to think about the priorities here, right? Okay, so let me see some of these chats. Never buy at a premium. Okay, somebody paid attention. It's going to change your life. Be patient and don't leave any money on the table is what I tell my traders. The fundamentals, always learn something new, especially about the interest rates. Sean, good to have you on the stream. Good to see you again. Certified speaker, stop playing. I think it's good news. Seriously on point. Got to be satisfied closing in blues no matter how small. Yep. And I don't want you guys to be satisfied with playing small. Don't think that you guys, oh, I went on ChartAddicts stream and ChartAddicts told me to play small. No. That's not what I said. What I said is be realistic with yourself. If you've never made more than $100 in a week and you keep trying to go for 1,000 and you're blowing accounts, it's time to cut that shit out. You're not going to go from blowing accounts to making 10 grand. You're going to go from blowing accounts to not blowing accounts to breaking even to making slight profits to then making serious profits. So accept the stage that you're in. And the more you try to skip steps, the further you just keep resetting the entire clock. All right. If this thing breaks down bearish, I'm going to go crazy. I genuinely did not expect bears to step in this soon. I understand that the overall trend is still bearish, but I really, really did not expect them to step in this fast. Sheesh. A nice pullback of 13,900. That could be an entry or a break below 13,800 and a short. So look at those psychological levels on Nasdaq, those whole numbers, and it's going to be a very, it's going to be a very good anchor for you to find entry zones if you stick to those key levels. So 13,900, 13,800, wait for a retest of those and you get a pretty good entry. Said gold is almost at highs. Yeah, gold is looking like it wants to push. Gold does the opposite of the dollar. You guys can see as the dollar continues to drop, gold will continue to push bullish. But at some point, I told you guys we're going to hit a floor and the dollar will continue bullish. There's just no way around it. They're creating scarcity in the market. That's supply and demand 101. So basically, that's what I use to reference the gold is I just look at the dollar. I look at the DXY. All right, y'all. I really got to get off. I'm just kind of shooting the shit here. Great to see you guys on the stream. Happy and safe trading. Again, my name is, I know I already said this, but my name is Roy Dunya, co-founder, CEO, ChartAddicts, the #1 coaching platform for traders worldwide. It's great to see you guys on the stream. Make sure to catch us on the next stream next Thursday if you're watching this on YouTube. If you're a ChartAddicts member, I'm going to see you guys in 7 minutes in the group chat when we're posting charts and I'm posting up my Nasdaq ideas. So it's great to see everybody. Happy and safe trading. Risk management is your best friend. If you're uncomfortable with trading, it's because you're over risked. If you're frustrated with trading, it's because you're not reviewing yourself. And so no matter how frustrated you are, no matter how pissed off you are, make sure you take that time to review your trading, to be able to gain clarity as to why you're losing and why you're not losing. And as soon as you can get to that point, that's when you're really, really getting to the point of success in trading. Is no matter whether you win or lose, you understood what happened, you can learn from it and get better for the next time around.